Welcome to ACC106 lecture series, and this video will be discussing on the topic of Introduction to Accounting. First of all, what is accounting? Well, the definitions say that accounting is a process of identifying, recording, classifying the business transactions, and from this process you summarize the transactions in terms of monetary units. So once you have summarized the business transactions, the interpretations of those summarizations information to be interpreted and communicate to those who have interest in the business, so that those who have interest in the business will make a better decisions for the businesses or for themselves. So normally the accounting will produce the financial statements. So financial statements is actually provide information to the interested parties, but the data that they use to record and control of business transactions, and also to maintain the accuracy in recording, and also to meet the requirements of the law, because every businesses, the companies especially, has a required by the law to produce these statements, statement of financial positions, and also statement of profit or loss. So those are financial statements that must be prepared and produced to the authorities. Same goes with the sole proprietor and also the partnerships, because they need to produce the evidence of the profit that they made to the lembaga hasil dalam negeri. And these financial statements actually to be presented to the owners of the businesses, so that they could make a better decision making for the business. And also the financial statements actually will show how efficient the allocation of resources of the business. So basically, the accounting process is identifying, recording, and then classify, and after classifications go to summarizations, reporting, and last, the interpreting the financial data in the financial statement. So the process of identifying is actually we looking at the events that have been taken place, and we will analyze how they would affect the businesses. So normally at the stage of identifying is we usually observe the source of documents and to interpret how the event actually affect the business. And the recording part is to enter the financial data into the system of account. And in the classifying stage, we actually sort and group the similar items. For example, we will group the items as expenses or the revenues, and summarize being where we bring the various informations together to determine the result. For example, the expenses that affect the core business, or the expenses that we call as other expenses. And the reports we do is the statements of financial positions and statement of profit or loss. That is the report they usually will make and present to the users. And normally users will interpret data inside the financial statements, whether the data is important for them to make decisions. So the accounting cycles actually require a few steps. The first steps in accounting cycle is to identify the business transactions, and the second step is to record in journals, so we call it as journalize the transactions. Then from the journal data we post to ledger accounts, or we call accountee, and then after complete the ledgers, we find the balances, and the balances will be transferred to trial balance, and usually we will make a pre-adjusted trial balance first. Then we will find out whether there are should be the adjustment that need to be included in the report. So we will journalize and then post the adjusting entries, especially the informations on the prepayments and accruals. These are normal adjustment that we do after we prepare the trial balance. So the next step is to prepare a post-adjusted trial balance after we make the adjustment, of course. And the last one, we prepare the financial statements. And once you already prepared the financial statements at the end of the year, so the next year will repeat the cycles again. So these are the accounting cycles that we do throughout the years, from the beginning to the end. And then for the next accounting year, we will do it again, the same, repeat the cycles. So basically, the basic activities will go to the accounting cycle, where we have the measurements. Measurements means that you identify the transitions, then the recordings, and then we prepare the financial statement. So preparing the financial statement is being used to communicate with the users, that is the decision makers. So who actually use the accounting information? So there are internal users and external users. So internal users normally is the owners, where the owner manage the business themselves and the managements. And if they are employees that use to decide for the company. And the external users, normally you have the owners as investor or the shareholders, the lenders, suppliers of goods, customers, the employees for their own individual purposes, and the government, and also the general public. So why do they need the accounting information? So the owners as manager need accounting data to identify what are the profit that has been earned by the business, how well the business has been run to make the profit, and to identify whether the business has the financial stability. So the financial stability means that the business will continue in the future. And also, the accounting information is very important for the owners to make the strategic plan, whether to expand or how the business can be grow in the future. So these decisions must be backed up by the accounting information from the financial statement. And the management, whether it is chief executive officer or the chief operating officer or the middle managers, so these are the management of the businesses. So the managers or the CEO or COO need accounting data for monitoring and control purposes, to monitor the procedures, productions, uh, the sales process, and so on. So this accounting data will show them the weaknesses or show them what are the strengths in their business. And also those accounting information is really needed to make plans for the businesses. Without the accounting data, it's difficult for them to decide for the futures. And also the accounting data will be used to organize the business operations. For example, just now we talk about monitoring the sales process. And the employees, as the internal users, will have the questions whether the business is growing or not. Because if it's growing, you should stay. But however, if the business is not progressing, so why would you stay and help the business grow? So how, if the business needs your help to grow, so where the part that you need to play to help the business grow? If business is not progressing at all, should you leave or find other opportunity? So these are the questions of the employees that can be answered if you read the financial statement. So the owners as investor means that owners is not involved in the management, so just putting the money into the business, such as the shareholders. So the owners as investor interested in the profit that earned by the business, because the profit is that profit made by the business is potential return for the shareholders, because the business will announce what are the dividends for the shareholders. And once they estimate the return on their investment, so they will decide whether to continue as shareholders or to stop their investment. And lenders means that people who lend the money to the business need the financial data to analyze whether that particular business is able to pay the long-term debt. So if the business can display in their financial statement that they're able to pay the long-term debt, so they can offer them the loan to lend the money to the business. The ability comprises the payment for principals and interest charge for the money lent to the business. However, for vendors and suppliers, it involves whether the business could pay, able to pay the short-term debt. So the payment of the debt owed should be as the credit terms that are given to the business. Usually the suppliers will give, let's say, 30 days, maximum days to delay the payment. So if they give that terms, they assured that the business that they send the product, the items, can pay within that 30 days. Otherwise, they will not decide to give credit at all. The government, especially the Lembaga Hasil Dalam Negeri and Custom Department, are the government bodies that very interested in the financial statement, the financial data that you should provide, because they would determine whether the tax paid or tax collected by them are accurate. So they will come and audit your company, looking at your financial and accounting data, whether you have recorded those tax accurately. And the customers, normally we as a customer don't really look into the accounting data of the businesses to buy product from them. However, for the high value of non-current asset, if you buy those high value assets, you usually need maintenance for those assets. For example, you buy a helicopter. It's very high value. $1 million is expenses, or $1 million money to be paid as the payment for the loan just to buy the helicopter. So those helicopters must be maintained by the one who sells the helicopters. We just cannot send the helicopter to be maintained at any outdoor workshops, right? So you need to assure that those people, those suppliers of your high value asset can do the maintenance for you in the future. If they are not continue their operations in the future, let's say the seller is bankrupt, so who are going to maintain your non-current asset? Who are going to maintain your helicopter? So it's impossible to find another seller that could maintain your helicopter. So you need, as a customer, you need to find the sellers that can continue their operations for quite some time until you finish using that asset for your operations. So you need an assurance they could maintain, do the maintenance your assets in the future. Okay, now we go to the next topic. The forms of businesses. Corporations is a Sundram Mahat or Berhad, sole proprietor, the partnerships, and also the cooperatives. So sole proprietorship is one owner. So the ACC106 will focus on this particular form of businesses because it's only one owner, and the owner is not legally separated from business because all the risk will be on owner, and owner takes all the profit, and owner usually make all decisions including buying the non-current asset. Source of capital, initially it will come from their own. And after the business has been set up, they borrowed the loan to increase their capital. And the common title of the company, the name, they say their enterprise. So that is an example of the title. Partnerships is 2 or more, and normally is for general partnerships is maximum of 20. And the owner, same as the sole proprietor, is not legally separated from businesses. And the partners will share all the risk, and the profit are shared according to the agreement. Partners may disagree on how to run the business. That's why you need an agreement among the partners. And the source of capital usually from partners' contributions. Once they set up the company, then they can borrow the money from somebody else. And the company title usually has N, for example, Arif and Co, Ali and Associates, and so on. So that the common title. For the corporations, means that Sundram Berhad and Berhad is more than one owner, and the new Companies Act, Sundram Berhad can be only one owner. A bit odd, but it's true. And owners are legally separated from the business. and the shareholders' risks are limited to the shares they owned, and the profit are distributed to the owner in terms of dividend, and the shareholders have actually little influence on business decision unless you are the major shareholders. And the social capital, shares issued, or you can issue the debenture once you establish the company. And the company title of the common title of the company usually have the words Nyamberheit and Berhard. Another form of businesses that is quite new for this stuff from 2016 Company Act. You have the limited liability partnership. Is actually is a hybrid from general partnerships and corporations. You can have two or more partners, and there is no maximum number of partners. And the owner, surprisingly, the owner will legally separate from this business. And the cooperatives is another forms of businesses in Malaysia. The members or the owners, at least 100 for the shareholders, and those are registered to Sriwijaya Koperasi. Other than corporations, you need to register with the company registrar. Owners are legally separated from business. However, there are many cases the owners are liable for the risks for the business, and their shareholders risks are limited to the share they own, just like corporations, the companies, and the profit distributed in terms of dividend. And the shareholders have little influence in business decisions, even though you have a voting power and so on in the annual general meeting. Normally, sadly, in practical, the shareholders have very little influence for the business decisions. And the social capital are the shares issued to the members of the cooperatives. And normally, you can find the word koperasi or corporations or kerjasama in the name or the title of the businesses. Okay, that's all for now for lectures on introduction to accounting. Thank you for watching. Watch out for the next video for the next topic. Bye bye.